What are you making of this reporting season, and what are you making of the oil price more fundamentally here?
So Haitong have a Brent forecast of $85 this year. I think actually when you look at the China results in energy, it sort of mirrors what we saw for global energy. You saw pretty robust upstream performance, a little bit weak in terms of refining chemicals. They're starting to buy back their shares. Yeah. There's deleveraging, and I think the dividends were reasonably solid. And I think that's what sort of a trend you're going to see again this year, because at $80 odd oil, it's still pretty robust for delivering good yield, and I think the companies will keep buying back their shares.
Is this sort of the earnings peak then that we're going to see for last year?
No, not for China. So we think China energy equities outperform global energy equities. We'd focus on Sinopec. That's a good value stock. It offers 8 to 9% yield this year and possibly next. You know that there's a domestic demand recovery of oil products and also chemicals, and they said that on their call. So that would be one to watch. And also natural gas names. So we like the China natural gas names. We think they'll outperform peers. Haitong see at least 10% gas demand growth in China this year.
So is it better to be sort of the coal face, as it were, I mean upstream, or is it better to be a downstream player?
Well,
or both?
Well, for China, we'd prefer refining chemical names because you've got a volume improvement. We'd also look at the actual oil service names. They're actually looking particularly good value, and they offer particularly good margins, even compared to international names. And even at this oil price, you know, we're still going to spend in oil and gas as well. We're forecasting 20% capex growth this year.
What happened to those $100 oil calls that people were kind of projecting earlier this year, that, you know, China's going to open up and we're going to see this pickup in demand? That seems to be fading, that call now. Are we ever going to see $100 oil?
If you look back, I mean, we set our $85 sort of late last year. I mean, last year we had a major geopolitical event on the supply side, and then there was demand disruption. So, of course, coming into this year, you haven't got that type of event. I think the price to us will be driven by demand, and more importantly, how does China recover in sort of towards the second half of this year? Do we really get back to sort of mid-single-digit demand growth again or more as it recovers quicker? And I don't know if there's enough evidence to say it's doing that at the moment.
What about how does, you know, new energy, clean energy figure in all this as well? I mean, because that's going to be key.
Yeah, so we did a big global new energy M&A study. We looked at 6,000 transactions since 2016. Our conclusions from that is, apart from deals having tripled, the size, the amounts have also tripled, but more importantly, 70% of these deals were done sort of China, US, Europe, and 70% of them were just wind and solar. So our advice to investors is focus on sort of overseas mid-cap sort of wind and solar names.